Hello, and welcome to the Banking and Finance series from Maple Covenant, your compass for a better life. Today, we're going to talk about something that a lot of us pay without even thinking about it, something that can quietly drain hundreds of dollars from your account every year: bank fees. This quote really hits the nail on the head. The thing about bank fees is that they're sneaky. They're usually small, they happen often, and honestly, they're not always explained very well. A few dollars here, a few dollars there, it doesn't seem like a big deal, but it adds up like a slow leak. So let's take a closer look at which fees are just a normal part of banking here in Canada and which ones are really just traps you can learn to avoid. First up, let's talk about the monthly account fee. This is super common in Canada, so don't be surprised by it. Most checking accounts come with a regular monthly charge, pretty much just for the service of having the account. Typically, you can expect to see a fee somewhere between $10 and $20 a month. But here's the most important part. You can often get this fee waived. Banks will usually drop the charge if you keep a certain minimum amount of money in your account or if you bundle other services with them, like a credit card or a savings account. They do it to encourage you to keep your business with them. So what does this mean for you? Well, if you can easily meet those conditions and get the fee waived, fantastic. That account is probably a good fit. But if you find yourself paying that fee month after month, that's a pretty clear sign that the account isn't quite right for you. It's always a good idea to look around for an account with a lower fee or even one of the great no-fee accounts that are out there. All right, let's move into the common fee traps. And the first one, it catches so many people. I'm talking about ATM fees. These are costs that are 100% avoidable, but they can add up so quickly. Just think about it for a second. We've all been there, right? You're in a rush, you need some cash, and you see an ATM from a different bank. It's just convenient, but what's the actual price of that convenience? The answer is usually somewhere between $3 and $5 for one single withdrawal. Now, that might not sound like a lot, but let's do the math. If you do that just once a week, and let's say it's $4 a pop, well, that's $16 a month just to get your own money out. That's often more than the entire monthly fee for your account. The solution here is so simple. You just have to make it a habit. Only use your own bank's ATMs. It's a tiny change to your routine that can honestly save you a surprising amount of money over a year. Okay, now for a big one. This is probably one of the most dangerous and misunderstood features in Canadian banking: overdraft. It's sold as a kind of safety net, but if you're not careful, it can turn into a very expensive trap. So here's how it works. Let's say you go to make a payment, but you don't quite have enough money in your account. The bank might step in and cover it for you so the payment doesn't bounce. Sounds helpful, right? But here's the catch. They charge you a high fee for doing that. And then, on top of the fee, they charge you interest every single day until you pay it back. The real danger is that a lot of people don't even know they've used it until they see the charges on their statement. So, I'm going to give you a very important piece of advice here. If you don't fully get how overdraft works on your account, or you just don't feel like you need it, you can just call your bank and ask them to turn the feature off. It is often so much safer to just have a transaction declined than to accidentally slip into that cycle of overdraft fees and daily interest. Now, that leads us to our next trap, which is related but a little different. It's the NSF fee, which stands for non-sufficient funds. This is a really expensive penalty for what's usually just an honest mistake. An NSF fee happens when a payment you've already scheduled, like your phone bill or your rent, tries to come out of your account, but there isn't enough money there to cover it. The payment fails, and the bank charges you a penalty. And this penalty is huge, often between $30 and $50 for one single failed payment. It's pretty painful. The way you avoid this is all about simple habits. First, always try to keep a little bit of a buffer, some extra cash in your account just in case. And second, just keep a mental note or a calendar of when your automatic payments are supposed to come out. Just being aware is your best defense against this really high fee. This next fee is a really big one for newcomers and for anyone who loves to shop online from international stores. It's the foreign transaction fee, and it's another one of those hidden costs that just shows up on your statement later. So when you use your Canadian card to pay for something in another currency, say US dollars or euros, most banks will add a fee just for converting the money. This is usually about 2.5% of the price. To put that in perspective, for every $100 you spend, the bank is quietly adding an extra $2.50 to the bill, just for the conversion. So if you're somebody who spends in other currencies pretty often, it is absolutely worth doing a little homework. Some banks offer credit cards with lower or even zero foreign transaction fees. And there are also specialized services out there that offer much, much better rates. Okay, we've gone through a bunch of different fees, and it might seem like a lot to remember, but the solution to avoiding all of them really comes down to the same thing: building a simple, consistent plan. Protecting your money isn't complicated. It's just about forming a few good habits. Here are 5 simple habits that will make all the difference. 1. Get into the routine of reading your bank statement every single month. 2. Take a little bit of time to really understand the conditions of your specific account, like that minimum balance we talked about. 3. Just like we discussed, stay away from overdraft unless it's a true emergency. 4. Use the tools your bank gives you. Set up alerts in your banking app that will tell you when your balance is low. And finally, number 5, please never be afraid to walk into your branch and ask questions. The people there, they are paid to help you understand all of this. I really want to leave you with this thought because it's so important. If you've paid some of these fees in the past, please know that it doesn't mean you failed or did something wrong. It's a really common experience. It just means you weren't informed. That's it. And at the end of the day, that's the real takeaway here. Once you are informed, you have the power. Understanding how these fees work is your key to avoiding them and building a stable financial life. Your knowledge truly is your best defense. In our next explainer, we're going to do a really deep dive into overdraft. We'll look at exactly how it works, why that daily interest is so damaging, and explore why it quietly hurts so many people right across Canada. Thank you so much for taking the time to learn with us today. If you found this helpful, please save it so you can come back to it. Maybe share it with a friend or another newcomer you know who could use this information. And of course, be sure to follow us so you don't miss the next episode in our series. Thank you.